Hey everybody, Courtney Smith here. Just want to make sure that you can see and hear me okay. Can you hear me okay? Can you hear me okay? Can you hear me okay? Want to make sure everybody can hear me? All right, then I think we can get going. And let's get going. I'm also going to turn on my video here so you can actually see me. Not that that's a big plus, but what can I say? All right. Oh, look, I'm seeing all kinds of people there from all over the place. Unbelievable. Wow. Wow, wow, wow. All right. We've got hundreds of people on here right now. Let's get going, shall we? All right. I think what I'm going to do is maybe I'll turn the video off and it might speed things up, but well, let's leave the video on for now. All right. Let's go. And what I want to do is I want to talk about gold. Now, we originally planned this presentation a week and a half ago. And in the last week and a half, we've seen gold make a major, major move. But I'm going to go over it, and I think there's lots more to be made. So let's get going here. Okay, why are we seeing this big move? A big part of it has to do with the Federal Reserve Bank. The Fed is increasing money supply at an incredible rate. You can see there on the far right of the chart that we're seeing a dramatic increase. We're talking about, so far, $3 trillion. Now, if you look back to 2007, you can see that all of the Fed money supply was only 800 billion. Then in the recession of 2008, they jacked that up by $1 billion. And you can see that they increased money supply all the way up to about $4 trillion by 2015. So then the interesting thing, the thing that people don't really realize, is that the Fed actually shrank the money supply from 2015 until early this year. But since then, they've added $3 trillion to money supply. Now, why is that important? Well, two reasons. Number one, it's a tremendous amount of liquidity that's now in the market. And that liquidity goes to buy stocks. And we've seen a good bull market in stocks. It also can go to buy gold. But the other thing that can happen is this, that what happens is that what we see is it can also lead to inflation down the road. And I'm going to get into that in more detail. Hey, I've turned off my video just to reduce the bandwidth because this is very bandwidth intensive. Okay, the second thing is interest rates. Now, on the chart, what I've got is a chart. A chart which shows the prime interest rate. And the prime interest rate is the rate that big banks lend to big corporations. And as a result, you can see that it has dropped dramatically. Most people look at the Fed funds rate, which is very, very important. But also what's important is the lending rate with big banks. So I thought I'd show you something a little different. So here we see that the prime rate to big corporations has dropped precipitously. It's now at the lowest rate that it's ever been. And what that means is that you can borrow money for basically nothing, big corporations. So one of the things that I'm going to show you a chart coming up in a few minutes that's very, very important. But low interest rates is a big factor that affects the level of gold. Now, here's why. One of the biggest uses of gold, I'm going to tell you in a few minutes what the biggest use of gold is, but one of the biggest uses is for central banks in their reserves. And what happens is that a central banker, let's pretend you're the head of the European Central Bank. And so what happens is that you have a choice. You need reserves, and you can get US dollars or you can get gold. Now, normally you want US dollars because you can buy treasury bills and earn interest. But with gold, you earn no interest. It's just a sterile asset. But if interest rates are effectively zero, well, might as well get gold, diversify out of the dollar. And that's what we're seeing right now as far as the interest rates affecting gold. But there's more, and I'm going to show you an amazing chart, probably the most important chart affecting the price of gold in a few minutes. Another thing that is big for the price of gold is the dollar. And you can see that the price of the dollar had a big rally, 10 years ago, but it's been in a consistent bear market and recently has accelerated the bear market. Well, as the price of gold, as the price of the dollar goes down, the price of gold goes up for the simple reason that it is a competitor. In other words, gold is money. And if the price of the dollar is going down, then the price of gold goes up. So this is an important factor. They're inversely related. So this is a big factor as well. Okay, this is something that we show every week in Wall Street Winners, and it shows three key factors that affect the price of gold. The gold mountain chart at the bottom, that's obviously the price of gold. At the top is a blue line, and that is the price of the euro. So it shows that the euro has just taken off to the upside. And if the euro is going to the upside, that means the dollar's going to the downside. So if euro up, then gold up. The middle panel is the CRB index, the Commodity Research Bureau index. And what it's telling us, it's a minor bull market, very minor bull market. But the CRB index is an index of commodity prices. And commodity prices are a leading indicator of inflation. If inflation goes up, the price of gold will go up. But it also affects the most powerful factor, which I'm going to show you in a few minutes. The bottom panel, the green line, shows the price of the yen. And you can see it's highly correlated with the price of gold. Out of the three indicators, it's the most highly correlated. And you can see that the skyrocketing yen is also now just triggering a rally in the price of gold. So here we go right here. This is probably the most powerful factor affecting the price of gold right now. What this shows is, it shows the 10-year Treasury notes after deducting inflation. So you take the 10-year Treasury note and then you subtract the current rate of inflation. And what's left are what are called real interest rates. This is what you get if you buy a 10-year Treasury and you hold it and you deduct inflation, because of course inflation eats away the value of your principal and interest. Well, as you can see, this chart goes back to just 2016, but you can see that we've gone into negative real interest rates. Interest rates are now far below the rate of inflation, which means that borrowing money, it's free money. It's free money. After inflation, it's free money. You got that? That's why this is the price of gold is skyrocketing, because we're seeing hedge funds, we're seeing central banks. They can go buy gold. And if you're a central bank or a major commercial bank, you don't even have to put up any margin or any money at all. You can just say, give me some gold, give me some gold. And this is the killer right here. Whenever you see negative real interest rates, you see a big bull market in gold. Big bull market in gold. And that's exactly, this is the major reason why we're seeing a major bull market in gold. But why now? Why now? Well, you saw the yen take off. When the yen goes up, gold goes up, and it just triggered a big bull move. And here you can see the negative interest rates have accelerated to the downside. There's still one more big factor as to why now. We'll get to it in a minute. But negative real interest rates always causes a big bull market in gold. Always, always has. Because it means that gold is increasing in value every single day. Now, what about supply and demand? Well, the bars that we see here, that is the supply of gold. And you can see it's very steady, very, very steady. This chart goes back to 2010. And you can see the supply of gold is very steady. So we don't have a shortage of gold in terms of, and that's not why we're rallying. But look at this, the demand for gold starting, there was a low here in 2018. And since then, the demand of gold has gone straight up. And this is one of the background features that's really causing the market to skyrocket. Okay, this is another factor that people aren't talking about, but there it is. Now, where is this gold going to? Well, gold has several uses. One of them is monetary. In other words, people like to own gold coins. They like to own gold as a hedge against inflation, a hedge against their currency devaluation, a hedge against crises like COVID or war. But I haven't gotten, and there's also industrial uses too. This is used in semiconductors, okay? Not a lot amount, but some amount is used there as well. So a strong economy would cause an increase in demand. But I haven't got to the critical factor yet. Wanted to show you this. This is an incredible indication of the fever around gold right now, a fever. Look at this is COMEX deliveries. Now, COMEX is the futures exchange where gold is traded. And every other month, the contracts mature. And if you want, you can take delivery of the gold. Most people don't. 99% of the time, you don't take delivery of the gold. But all of a sudden, people are taking delivery. 2 months ago, a huge delivery. Back here in 2006, there was a little bit more, but that's still a very high month. But look at this month. This is the month of June. Look at this. This is a multi-year record demand for gold. People are saying, I need it, and I need it now. So you're seeing a number of increases in the demand for gold that people just simply don't talk about. You're on this webinar because you want to see unique and you want to see indicators and you want to see what's really going on. This is an example of that. Okay, now who's buying gold? Well, this chart's going to help us figure it out. The top part here, this is the price of gold. So you can see the big bull market here. This goes back to 2016. This is the key part down here. There's 3 lines here, blue, black, and red. The red line are commercials. This is miners and refiners. Those are the biggest 2 commercial interests involved in the gold market. And what it says is, because it's below the 0 line, they're short gold. But they're not really short gold. They're selling gold to hedge their production. So if I'm a gold miner and I know I'm going to produce 1,000 ounces of gold next month, I could sell the futures contract and pre-sell my gold. So they're short. Small speculators, that's this black line. That's us. They've been a little long for quite some time. But the key market movers is the blue line. The blue line are what are called large speculators. This is really hedge funds, people like that who've got a lot of money, usually hedge funds. And they became massive buyers back here in 2019. Then they kind of took some profits in here, but you can see they've started to buy again. This is who's doing the buying. Once again, I'm showing you things that you're not going to see anyplace else. Now, here's the real reason I'm bullish now and why I wanted to do this report now. Gold is highly seasonal. Seasonality is when something occurs at the same time every year. And gold is highly seasonal. The yellow period, the yellow shading, shows the period of highest gold bullishness in the year. And what we're seeing is it starts August 1st. But of course, it's already started. But normally it starts August 1st and ends October 1st. So you've got August and September. Those 2 months account for nearly all the gains in gold every year. Just those 2 months. So that's coming up now. I wanted to do this presentation for you now. Okay? Really important. So this is one of the triggering factors. Now you may say, but why does the price of gold tend to drift lower, and then have this explosion in August? 50% of the demand for gold every year is for the Indian wedding season. In years past, the law in India was that women could only own what they could carry on their bodies. They weren't allowed to own real estate or securities or anything. If they couldn't carry it, they didn't get to own it. So what developed over thousands of years is that gold became the preferred gift at weddings, of course, to the bride. And so the bride would get all this gold because that became, in effect, her severance pay if she ever got divorced. So gold is very, very, very strong, very important in Indian culture and other cultures as well, but particularly Indian culture because of that. Now that law is gone now and women are allowed to own anything they want. But nonetheless, the culture remains, and that gold is the preferred gift to give to a woman when she gets married. 50% of the demand for gold every year comes from this one market. And what we have is that particular wedding season occurs in the fall. But what happens is that if you're going to buy the gold, you have to go to a jewelry store. The jewelry store buys it from the wholesaler. The wholesaler is buying it from the market. And that's why the rally in gold occurs during this period, because this is when the wholesalers buy. Then they sell it to the retailers, and the retailers sell it to the public. So as a result, we're going to see this. That's why it occurs slightly before the wedding season. This is something that very few people, if you read the gold bugs, they never talk about Indian wedding season. They look at monetary things, which is certainly very important. So how do we analyze the wedding season? Well, a lot of it has to do with the economy. Right now, even, we'll see this huge influx, but the wedding season will not be as strong this year because the economy is being hurt by COVID and other factors. So we're not going to see, if they don't have a lot of money, they can't buy 1 ounce of gold, they'll have to buy a half an ounce of gold. So we're not going to see this as strong, but it'll still be there because this is 50% of the demand for gold occurs in just this 2-month period. So that's an extraordinary amount of demand for a very short period of time. Now, I wanted to show you this chart as well. We're going to get into the technicals now. We've talked about the fundamentals. We've talked about why gold is in a bull market. We talked about why it's exploding now. This chart goes back to 2008, and we just recently surpassed the all-time highs in gold that were set back in 2011. Now, I shouldn't say all time, but well, technically, I think it's all time, but maybe sometime in the year 2000 BC, it was higher. I don't know, but certainly in the last century and a half, this is the highest price ever. And that's important because whenever a price makes a new high, you really want to buy. You don't want to sell. You want to buy because it shows that the underlying fundamentals are incredibly powerful. But I wanted to show you this bull market in context. Okay, so what is our conclusion here? I think it's pretty clear that the fundamentals are very, very bullish. The seasonals, though a bit muted this year, are still very bullish. Still 50% of the demand for the year is going to occur in the next 2 months. The commitment of traders that showed you that the big speculators are buying, also bullish, because they're the ones that move the market. The technicals are also bullish. Everybody knows it's a huge bull market. Let me go back to that. This chart is only a couple days old. That is a strong bull market. So we've got everything lined up for us. And to me, the real question is, well, let's go on. So the scenario is, I think we're going to see a little dip in prices for the simple reason that prices have gone too far, too fast. And when the market goes too far, too fast, you'll see some profit taking come into the market. And I think that profit taking will come in. We'll see a dip in gold, and it might last a week, maybe 2 weeks. And then we're going to see a resumption of the bull market because all of the things we've talked about before still remain. Now, I then say that the bull trend should last weeks or months. And the reason for that really is that the fundamental factors of the massive $3 trillion increase in liquidity, that's not going away. And the Fed is more likely to add more liquidity than to contract liquidity for the next year. A lot of this is going to depend on COVID, but I'm not seeing that the world's going to be where it was at the beginning of the year for another year. Some people think it won't ever go back to the way it was, but it's not going to be this year. That I'm pretty sure of, and I think most people would agree with me. But many months is going to go by before we see the Fed start to contract liquidity or raise interest rates. In terms of interest rates, they're not going to raise interest rates for 2-3 years. So that factor is going to remain bullish. At the same time, some of this increase in liquidity is going to increase inflation. So real interest rates will continue to go lower. And that's bullish for gold. And the massive increase in liquidity also is bearish for the dollar. So we're going to see the dollar go lower. So from a pure technical point of view, I think we're going to see a little dip in prices. It may have started this week already. We've seen a little bit of staggering here for a couple of days as people take profits. But once those profit takers are gone, this bull market's going to resume. Just the demand from the wedding season in India is going to be enough to get it to resume again. So what do? What could go wrong? Now, this is very unusual. Once again, you're on this webinar because you want to get unusual and unique information, and hopefully more powerful and profitable. One of the things I always like to do is to argue against myself. And I always want to argue against myself because it's important as an analyst and as a professional investor that we have intellectual honesty. In other words, we can't go out there and create an opinion and then find reasons to justify it. We have to look at both the bull case and the bear case and then make a decision. So what could go wrong with this scenario? Well, the Fed starts to tighten, or the European Central Bank and the Bank of Japan tighten. The chances of any of those things happening this year are as close to zero as you can get, okay? It's going to be close to zero. So we don't have to worry about these sorts of things. The only threat to this bull market is that we get massive profit taking rather than normal profit taking. And I don't see a reason to believe that that'll happen. But we'll play it, we'll watch it, and we'll watch it very closely for you. So what's the trading strategy? Well, the trading strategy is we need to be a little bit patient right now. And I think that that means that we're going to probably buy gold or gold ETFs after the dip. Now, I want to talk about this for a second, then follow the rules. And I'm a big believer in the rules. So we've got fundamental cases. There's a number of stocks that are just fantastic. So when we buy gold, how do we buy gold? Well, we can go and we could buy gold eagles or Kruger rands. Not bad, not a bad way, but really you only want to do that if you want to have them at home as disaster insurance. And I'm not really addressing the issue of disaster insurance. So probably not the best way to do it. Another way to do it is gold ETFs, which is really GLD. GLD is traded on the stock market. It's an ETF that it mimics the price of gold. All it does is own gold. And that's a great way to do it. You can buy it on margin, extremely liquid, zero commissions these days. So that's a great way to buy gold. What happens is that at some point, and I think we're close to that point right now, gold stocks start to outperform gold. And the reason is because gold stocks are effectively options on gold. You see, their fixed costs, their fixed cost to mine gold are the same every year. They really don't change much at all. So that's like the strike price in an option. So when the price of gold goes above that, all of a sudden it's 100% pure profit. So as the price of gold goes up, stocks actually will go up more than the price of gold will. So I think the best strategy is to really have a mix of gold and gold stocks. Now, gold stocks can be divided into two categories: big cap miners, American Barrick. You've heard of these companies, okay? And then what are called junior miners. And these are typically companies that have a very small mine, or they're just getting into mining or something like that. There's actually a third group called E&P, exploration and production. And these are people that just go find gold in the ground, and then they turn around and basically sell it to one of the bigger gold miners. I don't really cover E&P, and it's simply because I lived in Vancouver, Canada for a long time. And most, I shouldn't say most, but a very large percentage of E&P companies are scams. So I don't particularly feel like trying to figure out which ones are scams and which ones aren't. So I'll let them actually produce gold. They have even, if you buy the E&P companies, you have even more leverage, but I'll take less money and less risk. So these are the things we need to do. Buy gold, either in the form of gold, and I would suggest getting coins, not bars. And I would suggest either Kruger rands or American Eagles or Canadian maple leafs, depending on what country you're in, because they'll be recognizable. But I think gold ETFs and gold stocks are the best way to play it over the near term. We're not worried about disasters at this point. Now, when I say follow the rules, it's because, I teach particular techniques. I call them the rules. And I believe that the rules provide discipline. So we're in the middle of a little bit of a dip here. The time to buy the gold and the gold ETFs is when we break to new highs after the dip. And then we raise our stop loss up following the rules, okay? And that's my strategy. That's always my strategy. That provides discipline and keeps us not getting emotional. That's particularly important in trading gold, because gold is one of the most emotional things that you can trade. It's almost purely emotion, okay? Although I showed you a lot of good fundamentals. Okay, now, let me tell you how I can help you. I'm going to answer questions in just a few minutes here. So just hang on if you've got questions. I'd love to answer them. And of course, as always, I stay on until I've answered them all. So, all right, but here's how I can help you. So I put together a special gold report. I think we're going to see $3,000 an ounce, and we're at roughly 2,000 right now. So that's a 50% gain in the price of gold, which really means that the stocks are going to go up hundreds of percent, okay, hundreds of percent. And if you use leverage, that means you could make close to 1,000% on junior miners and even some of the large cap miners. So this is very important market to be playing right now, very important. But I put together this special gold report. And what it does is it has a little bit of a synopsis here. It's got my 5 favorite stocks to make the most money in the great gold bull market of 2020. And it's a mix. So I'll give you a preview. One of them is GLD, but then I've got the large cap and the small cap junior miners as well. The portfolio is going to give you a simple way to profit from the current bull market in gold. Get the report, and then all you have to do is follow the instructions, because I give the exact trading strategy in the report. So how do you get this report? Well, there's the bad news, but it's also good news. You got to subscribe to Wall Street Winners. If you're already a subscriber, you're going to get the report right away. You may have already gotten it by now, in fact. So Wall Street Winners, I got to tell you a little bit here. All right, so let me tell you about me for a second, because I don't talk about certain parts of my background, but let me just mention this. Timers Digest rated me the #1 gold market timer in the world 3 years in a row. 3 years in a row, the #1 gold market timer. Beat them all. I beat them all. And the reason, quite frankly, is because of these rules that I teach. So that's important for you to realize, that when you get onto Wall Street Winners, you're now with the guy who was the #1 gold market timer 3 years in a row. And by the way, why is it only 3? Because I only entered the contest 3 years. And then I said, okay, I think I've proven I'm the best, and I stopped. I was the treasurer of a Swiss bank. Who do you think the biggest movers are in the gold market? It's the Swiss banks. They own more gold than anybody, maybe more than Fort Knox, maybe more than the US government. That's the center of the gold world, is Zurich, and I was the treasurer of a Swiss bank, the 4th largest Swiss bank, in fact. So every day we dealt gold. And when you deal gold, you look at gold from a completely different perspective, because we're an institution. Every week, you're going to get a 20-minute video briefing on what's really moving the market, using powerful proprietary techniques you won't see anywhere else. No place else. Because I've been doing this for now 50 years, those techniques have been developed in 50 years. It comes out every Sunday night to prepare you for the coming week, and that's very helpful. I'm going to talk in every issue. I talk about what's going to happen in the stock market, the bond market, gold, US dollar, oil, and Bitcoin. So I cover all the major markets. You're not going to be left out of anything. I got you covered. And we've done trades in all of those. So here's why you should subscribe. You get specific actionable trades. I tell you where to buy, where to sell, when to buy, when to sell. So when we're talking about gold here, we already own gold stocks, but I'm going to buy more. I'm going to buy more. Every trade is followed through to the end. I'll raise stop losses if we're making money. You're never going to be left hanging. I really take you by the hand and tell you exactly where to go to make money. I originally started Wall Street Winners in 1995. That was 25 years ago, okay? That's a long time in the newsletter business. Let me put it to you that way. It was rated the #1 stock picking newsletter. That is to say, the most profitable newsletter for 5 years in a row by Hulbert Financial Digest. Why 5 years? After 5 years, I felt I had proved my case that I can pick stocks better than anybody. Oh, I'm sorry. My arm just got hurt patting myself on the back. All right. So it's only $47 a month. That's about $1.50 a day. That's less than Starbucks coffee. And you need to stop and think to yourself, do you need one of those little tiny cups of coffee, or do you need to make money? The way I look at it is you invest $47 per month. That creates more than $47 a month, which means you get your Starbucks coffee for free. You got that? And of course, you can cancel it at any time. So what do you need to do? Well, I need to come over here and you need to, there we go. There you go. Press the button over there. So what I want you to do is I want you to get this special report. It's got the guide for you to make money in the gold market, plus you get Wall Street winners every month. So all I want you to do is press the button over there, claim your special report now, subscribe, and then you're going to get immediate access to the special gold report, and you'll get access to the current issue of Wall Street Winners, which comes out Sunday evening. So you'll be able to double check what we're doing. So press the button now, and we'll go over and I'll start answering some questions. Now, I just got to figure out how to go do that. So I think if I go over here and press this button, who knows? I thought there was a way. Hey, stick with me. I'm going to answer the questions. I just got to get them all figured out. All right, I'm going way to the back here. So if you asked the question a long time ago, don't worry. I've got all your questions here. Okay. Ralph, everything is going fantastic. All right, let me scroll up here. All right, hang on. While I'm trying to figure out how to do this, go ahead and subscribe. Okay, Todd. Why, when the COVID panic happened, was there a sharp decrease in gold? Okay, so that's a very interesting question. You see, when we have when we see a bear market in the stock market start, one of the first things that happens is people need to get they need to get money to support their positions in the stock market. So the first thing that happens is they sell gold. And so what happens is that they sell the gold, and then once they've got the cash to support their stock market, then they're good. All right. They don't need they're good. All right. So what happens then is that this time around, I am looking for a bear market in the stock market, but I think that they've already liquidated and they're liquid, so they won't need to liquidate gold when the new bear market comes. We might see a little bit of a dip, but it won't be as big as the dip we saw earlier this year. It's kind of like that's already been discounted in the marketplace. Greg is saying, yeah, refi now. Yeah, interest rates aren't going to get any cheaper. That's right. Okay, Neil says, will Courtney mention anything about silver? I've been focusing on the gold market, but I think that silver is going to start to come along as well. Now, silver has a different seasonality. And by the way, platinum, December is the best month for platinum. But I think that silver is going to do very, very well as well. And I think in the upcoming issue of Wall Street Winners, we're going to start to add some silver stocks into the mix as well. So that should be coming up pretty soon. All right. Bullish. The problem with silver is that it does have industrial uses that are pretty significant. So that's why I kind of started focusing more on gold, because the industrial uses are not that important. But I see that silver is really starting to almost outperform gold over the last week, and I go where the action is. Dan asked, does this affect your bear market prediction for the entire market? No, this is actually enhances my prediction. If gold is skyrocketing, that almost certainly will lead to a bear market in the stock market, or it won't lead to it, but it'll be one of the factors that will. Faisal, I hope I'm pronouncing that right, Kabani, why invest in gold ETF if we can buy the physical gold? It's far more expensive to buy physical gold. If you buy physical gold, I mean a bar, the commission is going to be several percent. If I buy a gold ETF, it's zero. If I want to sell back the physical gold, then I'm going to have to have it assayed before the other person will buy it back. So I'm going to have to pay a commission and an assay fee. That's why I recommend gold coins. If I buy an American Gold Eagle, I don't have to pay for an assay. I still have to pay the commission, which is fairly low for gold eagles or Canadian maple leafs or South African Krugerrands, but it's pretty low, but it's still there. But at least I won't have to pay an assay because people will look at the coin and they'll see that it's legitimately gold. All right, Steve, we talked about silver. Chris, given volatility in miners and a 5-year strategy, why use stops? Because you always have to be you always have to manage your risk. I start out every trade assuming that there's a very high probability or high possibility that I'm going to be wrong. I can't let my ego get all wrapped up in my own BS. Do you see what I'm saying? So I start with the assumption, like, I'm very bullish on gold. Okay. But what if I'm wrong? I always have to assume that there's a chance I'm going to be wrong. I can't be so arrogant as to think that all my trades are going to be winners. So of course I have to put a stop loss in there in order to control my risk. I can't ever allow to have massive losses at all, period. This is what saves me in bear markets. That's one of the first things is, you got to protect yourself. Then you need to worry about making money. But first, protect. Most important thing for trading success, of course, is the psychology of investing. Number 2 is risk management. Okay, I got another question on silver. All right. Okay, Norm says, if one already has gold stocks that you recommended in Wall Street Winners, and Norm, they're making a lot of money, and they're up significantly, do you cash out and buy back during the dip or just sit tight and maybe add to it during the dip, which is normally counter to how you normally increase positions? Okay, so this is a great question, and I happen to have a great answer. So, no, I don't cash out because I think the dip is going to be small. So my scenario is we're going to have a small dip, not enough that would stop me out. I'll then, when the market starts to go back up again, I'll do 2 things. Number 1, I'll raise my stop loss to the bottom of the dip. And number 2, I'll buy more. Maybe not those stocks. I have to look and see what's really moving at that point. But I'll go back and add to my gold position. So I'm not going to trade out of it. I don't want to miss the move. I'm in it. I'm making money. It's all good. Christine says, do you have any info on the U.S. switching to a digital dollar? Well, of course, they want everybody to go to a digital dollar so they can tax everything all the time. But that's not going to happen for years. Okay, not for years. Okay, another question on silver. Okay. When do we know when is the right time to take profits? All right, that is also a great question. So obviously the best thing is to subscribe to Wall Street Winners because I'll tell you, okay? That makes it easy, very, very easy. But this is why I say you have to follow the rules. So whatever technique you're using, if you don't subscribe to Wall Street Winners, that's fine. Your $47 is not going to change my life. But if you decide to do it on your own, then what you need to do is you need to have rules. So the rules may say that I'm going to have a trailing stop. Okay, I don't recommend trailing stops, but let's say it's a $100 trailing stop. Well, that means that if the price comes down by $100, you get out and you take your profits. But find profitable rules and then follow them. Don't get emotional about the market. Follow them. That's what you need to do. All right? That's what you need to do. All right. Sanjay, with the current lockdown situation in India, delaying all weddings, do you see a delay in the gold rush to later in the fall or winter? Well, Sanjay, given your name, you probably have a better idea than I do, okay? Uh, I do think that there's going to be some delay. I do see that. I think that's right. I think we're going to have the season will still start at the same time because people are optimistic, but it won't be as good as it has been in years past. As I say, I think people will buy less gold for the brides. And I think you raised the other point that it might get spread over a couple more months, that sort of thing. I see in the news today that they did a study of the poor sections of Mumbai, and they believe that well over 50% of the people in this poor neighborhood in Mumbai already have had COVID. So it's quite possible that it won't get delayed that much. I mean, if 65% of the people already have had COVID, then they don't need to be locked down anymore. SB asked the question, gold is at an all-time high today. Isn't it too late to start a position? Well, this is why I showed you that one chart. You always want to buy when something makes a new all-time high. You want to buy every time something makes a new all-time high. That's a buy signal because it means that the fundamentals are so powerful that it's making new all-time highs. Let me go back to India. One of my students there was a professional trader. He loved my course because he said it added so much more to what he was already doing, particularly in risk management. So, but I asked him, I said, well, how are you making your decisions? And he was buying Indian stocks. And he said, I just buy every stock that gets to a 52-week high. You see, making 52 weeks high is a profitable trading strategy in stocks. Getting to new all-time highs in commodities is a profitable strategy. So SB, no, this is just right now. In the last couple of days, we saw a little bit of a dip the other day. I'm sort of feeling that we are going to see more profit taking come into the market. John asked a question. I recently became a subscriber to Wall Street Winners. You're my new with your stock picks. Yes, you should. Now, I'm trying to find ways to pyramid those positions. So that's going to be helpful as well to you. Okay. What is silver seasonality? Well, actually, silver does better in the springtime. Springtime is best for silver. August through October is best for gold, and December is best for platinum. All right. Okay. Brandon says, unrelated to gold, in Wall Street Winners, you said you think that that when big tech reports this week that they will disappoint it. I actually never said that. Almost all the FANG stocks report tomorrow. If they do all disappoint, do you think that could be a trigger for the bear market since they make up so much of the market? Very good point, Brandon. Yes, I do. Those stocks, even though I didn't say it, I'll say it now. I think they're priced for perfection. Those big FANG stocks, they were in front of, several of them are in front of Congress today. I sent out a trade secrets, or it's going out this afternoon, about the FANG stocks. And basically, they have pulled the whole NASDAQ higher. The S&P, not so strong. Dow, not so strong. The NASDAQ has been in a clear bull market because of 4 or 5 stocks only, not a broad market increase. So yes, it could be the trigger. If they are all disappoint tomorrow, you could see the bear market start tomorrow. If there's a crash in the market, Henrik says, will gold still go up? Well, as I said earlier, there could be a chance that we see a dip as people liquidate gold to support their stock market positions. But we already got that earlier this year. So the next time that happens, it might be a little dip, but then gold will go up higher. And the reason is because everybody knows that the Fed will throw another 3 trillion or 4 trillion or 10 trillion at the market. So the answer is what normally happens in a stock market crash is gold goes down at the beginning, but before the recession is over, it starts to rally. And it's really that liquidation because we need cash. I'm going to liquidate because I don't know if I'm going to have my job or my house or my margin call on my stock or whatever. So as a result, it's all very, very, it's temporary. But eventually, because of what the Fed does, um, is they massively ease, which makes gold much more attractive. And the Fed's very happy to degrade the price of the dollar because they think that it'll increase exports. So yeah, no, a big bear market or a stock market crash, initial dip, then very quickly it'll turn into a big bull market. All right, I wore you all out. I answered all your questions, everybody. Really appreciate having you here. Subscribe to Wall Street Winners. That's great. Then I can help you out. But if you don't take advantage of this information and go out and make a lot of money in the stock market. All right, everybody, that's it for me. Thank you very much. I appreciate you taking the time to enjoy this. I hope you learned a lot, and I certainly hope you go make a lot of money. All right, everybody, thanks very much. We will talk to you later.